All right, all right. It's NeoFX, guys, with Black Flag Trading. It's May 5th, 2007. I'm sorry, 17. Um, so, really quickly, New Zealand, it's been an amazing week. Amazing week. And it's not over yet. Um, it's been a lot of movement in the Forex. A lot of movement. Okay. So, we have a couple of things. Well, let's go back to the main charts I want to show you. So, how to keep it simple and how to therefore find opportunities in the different time frames that you're allowed to trade. There's always going to be an opportunity, guys. If you hit a slump, there was a period right before the last couple of weeks before the European election. Um, Everything was kind of trending and everything was kind of going sideways. Okay, it was very stagnant. So in those types of scenarios, in that type of period, you're just gonna have to think on your feet. You're just gonna have to go in on the smaller time frames and start scalping the shit out of it. It's just that simple. Okay, there's not only one way to make money. I talk about swing trading all the time because it allows me to do what I want to do in the meantime. Okay, with barely looking at this 2 3 times a day just to manage the trades. But by swing trading, I'm talking about trades anywhere from 3 to 4 days to maybe 3 to 4 weeks. Okay, on bigger swings, possibly a month and a half, but no more than that. So, but it's not to say that a lot of people, especially early on, they just won't have the patience. They won't have the guts, and don't take offense to it. It's just part of the ritual. You're gonna have to overcome that eventually. You just don't have the nerves for the up and down, because you're up 1 week 150 pips, then it pulls back as it naturally does, and you're thinking you're stuck in a rut, day in and day out, going up and down. Well, if you look at the big picture, if you set your targets right, just give it time, you'll get there. If you have to wait 2 weeks for 200 pips move, then wait 2 weeks and don't fuck with it. That's it. I mean, manage it, take a look at it in the morning and at night, and make sure nothing's out of whack, and just manage it. You may say, well, I go for 50 pips a day. Well, 50 pips aren't always possible every day. I'm telling you. Across multiple pairs there, I mean, it is, but it's not always possible 50 pips a day. A lot of times this market just fucking goes sideways. So what do we have here? I want to show you guys how to keep it very simple. Okay, we're on a weekly chart of the New Zealand dollar. I had this buy level here for, oh God, shit, I want to say since probably 2013-14. I knew it would pull back to that level, and I'll tell you exactly why. Okay, I didn't just pull it out of my ass. I'll tell you exactly why. It's because after the crash in 08, what did we have? We had not the prettiest and not that symmetrical, but it was a big ABCD swing nonetheless. A, B, C, it bounced off the 50% for about a year and a half. Okay. So it fought it. It fought it. The Bears tried to take it down, for quite a few times. They didn't manage to do it. Took off. So like I said, the targets on a Fibonacci ABCD move, if it hits the 38, 50, or 618, it's going to be your 1618. And then it's going to pull back. Now, it did here. It did right. I mean, look at this. You're talking a span of 2010 or 11 to January 2013. 2 years. It hit that 85.50 level. I mean, it went up and kissed it beautifully, right here. Okay, it pulled back. Now it made another run. So you're just gonna have to think on your feet here too. A, B, C, D is, yes, in theory, CD, your CD leg will be equal to AB, but it's not always the case. And if you've done this long enough, you'll know that. So with that in mind, you can adjust it. Okay, so now you know that one ABCD has been completed. So we're gonna take the last C and bring it to the last to the what actually ended up being the D point, because it went past this and then pulled back, made new lows. So we can call this safely the ABCD swing. Okay, so why did I wait for this 618 level? Not just because it was a 618 retracement, which I love, but because look at this. While it was fighting here for the last, from 2009 to 11, this 2 years, this channel here, I mean, there was unbelievable resistance here. Okay, this was a ceiling back then. There's no ifs or buts about it. Just look at it. This was a ceiling over and over, just like this was the bottom. Okay, it tested it for a year and a half, up and down, up and down, up and down. Finally broke through the range and took off to our D point. So we have a convergence point between our 618 retracement level, and it did. And what did it do? It pulled up, right? It pulled back. It bounced there. It bounced exactly there. 618 retracement level and this unbelievable resistance level. Because like I said, right, you've heard this. Previous resistance becomes future support, at least momentarily. You always want to think in those terms, momentarily, okay? They'll come back and revisit those levels eventually, but for now, we have to think that, we have to anticipate a bounce, and it did. So, what now, you say? Well, you're going to have to zoom in to a smaller time frame, and this is what we have. So this was the C point on the weekly, right? What are the rules? The rules are always the same. This was obviously a downtrend, connect those lower highs until it breaks it, comes back to the back side of it, which it did textbook, and took off again. Where are we now? Well, we're in no man's land now, because once the trend breaks, it goes at least to the 38%, which it blew right through it. It almost went to the 618 retracement of this last high-low swing. Okay, so let's take that. I don't want to confuse you with that. I use those because I'll work within those levels. On smaller time frames, I'll work within the Fibonacci retracement levels on the bigger time frames. Okay, so, but let's just say that right now, I mean, we have that pullback which was completed, and then you're like, well, what do I do now? Well, once it broke this downtrend and pulled up, there's no real telling exactly where it's gonna go, because it can go on and on. But here the D target would have been this AB, if you can spot it at the bottom here, ABC D. I mean, this is the top now. We would expect a pullback. You didn't do it right at that level, spiked through it a little bit, but it came back with a double top. It came back. So we know that our ABCD, temporary ABCD, got completed. Move our Fibonacci's with our new ABCD. The last C becomes the A. This is our B. I mean, the D becomes the D. And let's see what it's doing. Okay, so we're at a 618, more or less. We're at a 618. It just poked through it a little bit, but I mean, I'm pretty confident that this will hold, and I'll tell you why. Because it already confirmed it to me. Because what do we do now? So if we're to think that we're gonna bounce here, we're gonna find some level of support. So what do? Well, the same thing over and over again. Go to your 4-hour time frame in this case, right? Clear downtrend from that double top, because we have to wait for confirmation. Now, our vision is right. We have an anticipation point of where we want it to bounce, but then you want confirmations. So you go into smaller time frames And what do? You draw that inner and outer trend line connecting the higher lows. Okay. The inner got broken. What does it do? What do I always say it does? It breaks it, comes back to the back side of it, and goes up. Now we have the outer to deal with still. And the outer, I mean, we had the little bump here, but it's stalled, and it's given us, I think, in my opinion, it's given us a chance to get in. Where do we target? Very easy. The target is going to be based on the initial A, B. You have to spot these A, B, C, D's guys. They're not always textbook, but you have to spot them. Last low to last high before a new low. Now, where's the target for that? Target for that, you're going to find some convergence points between your two A, B, C, D, these extension levels, which is 1 and 2, and see if it matches anything with this down A, B swing. And where does it fall? It falls right in the middle of the 38%, which is also a rule that I talk about, that I always say, once you start reversing from a pretty major move, in this case a downtrend, at the very least prices will come back to the 38%. So we're not there yet. So any pullbacks from this bottom should be a buy. Our A, B, C, D that we're going off of in this case is this one, A, B, C, D. So I'm going to play safe. I think it's going to get to that 78, 70, but let's go to the 127 because this C point came back to the 786. So what do I say? If it comes back to a 786 retracement, it typically only has enough energy to go to the 127. Now, I think the 38 will be hit, the 38 retracement of this down AB, right? But let's keep it safe. So I am long New Zealand yen as of May 5th. I got in, I bought this at the bottom. If you saw my Facebook, I bought it. I rode it up a little bit. Then it started crashing after this gap, and I got out with maybe 80 pips. And then I waited to see what happened. And you know, if we're convinced that we're still going up, what do you look for? What do you look for? You look for this. Okay, if we're convinced that we're going up, and then you get this massive pullback, well, just draw those counter trend lines, and the moment it breaks, it's your okay. It's your cue that it's resuming, you know, its way up, at least to that momentary, to the temporary ABC decompletion, which should coincide at least with the 38% of this down AB. Okay, but like I said, we'll play it safe. So why did I get in here? Well, you know, it doesn't take a rocket scientist to know that, because if I'm convinced that this A, B, C, D hasn't completed yet, well, because it won't. I mean, it won't just go from C to D like that. It's gonna get there also in zigzag, you know, movement, and also in new smaller A, B, C, D. So that's all I'm doing. That's all I'm doing. You have to know the big picture though to recognize these. So A, B, we're at a 50%. Can it? I mean, could it come down to this 618? Sure, that's okay. I mean, it's worth the 30 pip risk for what? 78.50. I got it at 77 for 150, right? This was that 1 to 5, was 1 to 4 risk reward. So anyway, we're bullish New Zealand yen. Let me put the trade on. 5.5 at 77 till 78.50. Okay. So we'll keep our eyes on it, and I'll holler back at you. Thank you. All right, guys. It's Wednesday, May 5th. I'm sorry, May 10th. Just a follow up on our trade from last week. Here's your 150 pips on New Zealand yen. We got in at 77.03 right here. Our target, our conservative target was 78.50. So here we go, 5 days later. But if you count the weekend, really 3 days, technically 3 days later. We bought this on Friday. So here we go. Worked out pretty good. Thank you.